Hello everyone. Irrespective of whatever happened in the world, as long as it won't affect that particular country, then that country will function as it was nothing happened around them. So that's what exactly happened in the world yesterday. Despite Israel conflict, Asian market closed mixed and European market too closed mixed. Then coming to US, because of this conflict and the super positive close on Friday made it to have some profit booking. Thus initially all three US major index opened not much, marginally negative. Then in the US afternoon time, in one of the economic business conference, Fed Vice Chairman Jefferson said that because of this recent sudden increase of 10-year bond yield to over 16-year high, more probable chance that Fed will pause the interest rate as it is now in the upcoming November 1st meeting. This immediately made the 10-year bond yield to drop 3%, which indeed turned the US stock market back into positive territory. Here, because of this Israel conflict and the possible escalation to Iran made the oil price to increase over 4%. At the time of this video, WTI crude oil closed at near $86.5 per barrel and Brent crude oil trading near $88 per barrel. And because of this oil price increase, all the oil sector stocks in US was throughout very positive. Thus, as a overall in the end in US, Dow Jones increased 0.59%, S&P 500 up by 0.63%, whereas Nasdaq increased 0.39%. Here, despite this positive close, US VIX marginal increased and moved to 17.7 from below 17.5 on Friday. Now, the moment US market turned positive, at the same time here our GIFT Nifty also turned positive. At the early morning today, it closed at 19,600. So for now, GIFT Nifty is indicating a gap up opening of 60 to 90 points. Here, yesterday in GIFT Nifty, there was no premium to the spot market, but as we know, yesterday was the first day after the conflict, so there are a lot of uncertainties. Thus, there is a chance we might have 30 to 40 points premium today. That's the reason I'm saying 60 to 90 points rather than not blindly 90 points gap up. Anyway, that's the whole story, but the individual stock signals different tone. First of all, all Indian ADR closed negative, especially IT, it was more negative than Indian market, whereas in terms of banks, it closed negative but less negative than Indian market. So this indicating banks to trade neutral today, but IT to trade negative. Then if you see the Reliance GDR, it's even more worse. Yesterday in Indian market, it dropped around 1%, whereas in the evening, the escalation in Israel increased and thus it dropped further and ended the day with massive negative 2.5%. We discussed this yesterday. 16% of India's oil production export is exporting it to Israel. So, though oil price increase is positive for oil companies, but our buyer is in trouble. So, that's what holding the Reliance stock price. So, this is what happened yesterday in the global market. Now, let's move to stock and India specific info. First, let's look at this graph. This is the India's government 10-year bond yield. On Thursday, it was near 7.2%. Then on Friday, because of RBI policy, again which we discussed in the week ahead video, it increased to 7.34%. Now, yesterday in the aftermarket hours, it further increased to 7.39%. Again, if it increased to above 7.5%, then for sure it will be negative. Even at present itself, it's negative. Anyway, be watchful of this bond yield movement since any day this week it might influence the Indian market. Second, positive Indian macro. I'm not sure how much I can trust this data, but as per Indian Government National Survey Office, India's unemployment rate in the last 1 year dropped to 6-year low value 3.2%. If this data is true, then it's very positive. Third, about insurance sector, India's non-life insurance revenue increased by 29% on September month. This is huge positive for non-life insurance stock. However, in the life insurance space, LIC lost near 10% of its market share, whereas others like HDFC, ICICI and mainly SBI increased their market share. So, as per that, negative for LIC and positive for SBI life insurance. Fourth, stock related, Tata Steel. It got one positive and one negative. So, first positive, rating agency Fitch upgraded Tata Steel credit rating to BBB- with stable stable outlook from BB+. However, on the negative side, their quarterly steel output in the September quarter dropped by 3.2%. So I don't know which outweighs which. Finally, for the 14th consecutive day, FIA was net seller. The net sold for near 1000 crore rupees, whereas again DI supported the market. They bought for 2660 crore rupees. As a summary, compared to yesterday, global momentum improved now. US market closed positive and GIFT Nifty indicating a gap up opening of 60 to 90 points. However, Reliance GDR and IT stocks ADR negative close is a worrying sign. And on the positive side, finally banks looks settling, but always keep an eye out for 10-year bond yield value. If it further increases above 8% means, then the first stock that will get hit will be banks. And also, if this Israel conflict escalated to another level means, then that will also impact negatively. Just for info, yesterday 71% total number of stocks and all 13 major sectors were declined, only 25% advanced. As per stock open interest, United Breweries, IPCA Laboratories, Persistent Systems, Athul Auto and Hero Motocorp got an increase in open interest along with a negative close, indicates the short buildup. On the other hand, HCL Technologies, Aurobindo Pharma, Metropolis Healthcare, Tata Consumer Products and L&T Technology Services got an increase in open interest with a positive price close, which means these stocks got the long buildup. Regarding the things to look out, as far as I know, there will be no major events or scheduled release apart from the speech of some FOMC members. Coming to technical, Nifty opened gap down at 19,539 and it tried some recovery in the initial hour to the day's high of 19,589, but it could not surpass 19,600 level. Then it lost its recovered gains and remained volatile for the rest of the session with a negative bias before closing at 19,512. Thus, it forms a bearish candlestick pattern with long upper and minor lower shadows on the daily chart. Technically, this pattern indicates a lower top formation and this is a negative indication and we may expect some more weakness in the short term. Basically, yesterday Nifty witnessed a correction and it's in the process of retracing the rise it has witnessed from 19,333 to 19,676. So, on the way down, the support is placed in the zone 19,500 to 19,460, which coincides with the gap area formed on 5th October, 61.82% Fibonacci retracement level and 50-day exponential moving average. If it decisively breaks 19,450, then more correction is likely to. But if it managed to stay above 19,550, then Nifty is likely to resume its next leg of up move from the support zone. Then in case of Bank Nifty, it also opened the gap down and made a new low of 43,796, which is a sign of weakness. It is currently trading around the previous swing lows 43,700 to 43,600. So in the next some trading sessions, it might be down to that level. However, Bank Nifty is currently oversold and also it shows the signs of divergence on the daily chart. However, price confirmation is awaited. In terms of levels, 43,700 to 43,600 shall act as the crucial support zone, while 44,200 to 44,300 shall act as the immediate hurdle zone. Just one more info, yesterday India VIX increased by over 12% and moved to 11.55. Here for the last some months, Indian market used to this low VIX environment. So for one or the other reason, if it gone above 12 to 13 level means, then it can bring a more bearish trend in the market. So be watchful there as well. Then in the options front, the maximum call option open interest was at 19,800 strike, followed by 20,000 and 19,600 strikes, with meaningful new call option writing at 19,800 strike, then 19,600 strike. Here, as per this data, on the higher side, Nifty might face a hurdle at 19,600 to 19,800. Then on the downside, the maximum put option open interest was at 19,500 strike followed by 19,000 strike with new put option writing at 19,500 strike then 19,200 strike. Thus, this options data indicating that 19,500 is expected to be a key support area in the immediate term. Similarly, on the Bank Nifty, strong new number of put options were added at 43,500. Hence, 43,500 is the immediate support on the higher side. 44,500 is the resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.